welcome to the 79th edition of LM's Weekly Wrap, our weekly program for the market-related developments. It's been a week where we've had a start to the new year and a lot of data points coming out as far as the different sectors were concerned. And in a way, this was a kind of a volatile week because we saw global developments impact the markets. Markets were a little bit concerned about the quantum and the exact timing of the rate cuts. While the US markets are pretty much confident that the rate cuts will happen, but the extent of the rate cuts and the exact timing is something which is worrying the markets at this point in time. At the same time, there have been some the rise in the geopolitical tensions, the Red Sea related developments, and the spike in the crude consequently to all these developments. And we are also seeing the shipping costs beginning to inch up, which is likely to have a negative impact on inflation. So I think a few global developments which really impacted the markets, along with certain data points which the markets did not like, and we had the markets come under some sort of pressure, but then things turned around very dramatically. So to explain all these things, we have with us Jash. Jash, welcome to the show, and kindly take us ahead, and that will be followed by the sector-related developments from my side.
Thank you so much, sir. As Nirav sir has already given a hint on the geopolitical issues, I'll continue on that. So the Red Sea and the shipping costs that have been increasing, it will definitely give a pressure to the inflation and export-driven companies that are there in India. So I think that is where we need to watch out. Apart from that, crude we are seeing at about $78-79 a barrel right now, which is still very comfortable. It has obviously come up from $75 a barrel from last week, but we are still comfortable. And we had also seen some kind of article on one of the Middle Eastern countries having their target for crude at $60 a barrel. That was cheered for a bit, but I don't know what the geopolitical issues is going to go in a way. So let's wait and watch over there. Coming back to the domestic markets, I think we had seen some kind of pressure in the first few trading sessions in this week, and today we see the market is very resilient and we are seeing some kind of up moves. But to point out, there has been sector rotation and stock specific movement. We are seeing some pockets of the market moving upwards, and not the whole market that we were seeing in the last year. So it's very important for us to identify and have our exposures in line to the sector that to a particular sector, so we get benefit of the sector that is moving. And if we just blindfoldedly invest in one sector, and if it goes into the negative downturn, so that's where we need to be very sharp, and I think also cautious at the same time. I think that's about it for the domestic and the global markets, and I'll hand over to Nirav sir. Thank you.
Yeah, thank you, Jash. So yes, now there have been certain challenges, but starting off with the domestic markets, I think we start off with the auto sector. We had the monthly auto sales numbers, and while commercial vehicles and tractors did disappoint, I think PVs continue to be on the growth path. The best part about the PVs, passenger vehicles, is that SUVs now form the composition in the product mix is close to 50%. So we have the higher paying sectors which are compensating. The product mix is becoming more and more enriched. And we are seeing SUVs continue to give a good growth. There's been a growth of 26% on a year-on-year basis as far as the SUVs are concerned. So the entire composition of passenger vehicles is looking quite rich in its content, and after this we have the two-wheeler category. Two-wheelers was slightly disappointing because the expectations were very high as far as the two-wheeler space is concerned, but I think still the Bajaj Auto announcement of a buyback did manage to save the sentiment as far as the two-wheeler space is concerned. So overall, I think the volume numbers have been slightly disappointing. The volume growth, degrowth, as we have been pointing out time and again, that volume growth has not kept pace, whereas realizations have kept pace, and most of the companies have been craving for volume growth, which has been very, very elusive. So this is the auto side. We have banks. In banks, this was a very, very challenging week. As far as the banking space is concerned, there was a lot of volatility. But I think that we had quarterly updates which came in from Bajaj Finance, IndusInd Bank, and the smaller banks. And today we had the update coming in from HDFC Bank. So I think the sentiment was still continues to be very, very volatile as far as the banking space is concerned. The PSU banking space is it's in its own set of world, and we have the private sector banks which continue to struggle. So I think one important factor is that the FII concentration is very high as far as the private banking space is concerned. So I think private banking space will give us an idea about how the FIIs are positioned in the market. Nonetheless, I think Axis Bank doing well in today's market, but the other banks did show some kind of pressure in the market. Capital goods continues to do very well. We have a lot of companies declaring their order books, etc., and the order books have been quite strong. So I think capital goods continues to do very well. I think we saw IT sector, while our outlook for the IT sector remains one of cautious optimism, but we did see upgrades as far as certain FII investors were concerned with respect to IT. So today we had Infosys, TCS, Wipro, which continued to rally in the market. As far as FMCG is concerned, we have a couple of stocks which are in focus: Britannia and Nestle. Nestle down about 2% after the stock split, but I think the potential remains very, very strong. Britannia also having a strong potential as far as the near term to medium term outlook is concerned. As far as the other sectors are concerned, I think oil and gas continues to do well. Metal has been under pressure. We saw on account of the global cues, the metal stocks did come under pressure before showing some signs of recovery. And as far as railways is concerned, continues to be the darling of the markets. We are seeing that the railway stocks continue to do exceptionally well in the markets, whether it's the wagon makers or whether it is the PSUs. And I think we saw some exceptional performances coming in from Railtel or the sort of rides, etc. They've been doing exceptionally well in the market. Defense, there is a development, I think very, very optimistic that the value of production is likely to go up to 1,50,000 crores, and the share of exports is going to go up from 16,000 crores to 20,000 crores. The share of the private sector players in participation of the private sector players is likely to be around 45% in value terms. So I think all this has really enthused the defense stocks. There is talk that HAL's order book is likely to triple in FY26. So I think multiple brokerage upgrades coming in as far as HAL is concerned. Hindustan Aeronautics. We have the shipbuilders which continue to do exceptionally well in trade. So I think no dearth of ideas in the market. Certain sectors continue to do very well, and I think prominently I would like to point out three: defense, railways, and power sector. In power also we have power generation companies, we have T&D companies, etc., which continue to do exceptionally well. The recent Gujarat government, which has signed the MOU with Torrent Power, it has signed a MOU with Rural Electrification Corporation, etc., continue to augur very well for the markets. Overall, while it's been a challenging market, I think still the hope and the optimism remains as far as the market is concerned. We'll be having more upgrades coming in, updates coming in the next week. And start 11th of January, we have the Q3 earnings season start pick up in a meaningful way, where we'll be having the numbers of TCS and Infosys. So that's about all. I think overall market continues to be positive, and keep booking profits at regular intervals. That's about all from my side. I'll hand over to Jash for the closing comments.
Thank you so much. Thank you for the valuable insights on all sectors and the upcoming earnings season as well. And we'll see you next week. Thank you.
Thank you.